Heya Cryptozens, tonight's show. The Bank for International Settlements says banks should limit their Bitcoin to 1%. Cryptoqueen hits FBI's top 10 list. And Grayscale sues the SEC. It's 10 p.m. Pacific, and the date is June 30th, 2022. Welcome back to the Crypto Overnighter. My name is Nicodemus, and I'll be your host. The cover model, mascot, and co-host for this podcast is Tex. And together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. So take a minute, go ahead and subscribe to the podcast now, because we're here at 10 p.m. each and every night, so that when you leave in the morning, you're taking with you the crypto news analysis that you need to start your day. And keep in mind, nothing in this show should ever be considered financial advice. The Basel Committee on Banking Supervision is a conglomeration of bankers. Not just bankers, central bankers. The central bank governors of the Group of 10 countries established the Basel Committee in 1974. And now there are 45 members in 28 jurisdictions, and it's part of the Bank for International Settlements in Basel, Switzerland. Well, this group of bankers has some thoughts on how much cryptocurrency banks should be holding. You see, central bankers want to limit banks' digital exposure to just 1%, no more than 1% of their equity. That suggestion came today in the form of a consultative document. It's called the Second Consultation on the Prudent Treatment of Crypto Asset Exposures. And in this consultative document, they lay out their suggestions for how to appropriately manage Bitcoin if you're a bank. Now, one thing to know is they're changing things up a bit. Two groups of crypto assets. So group one is tokenized traditional assets or known effective stabilization mechanisms. So that would be things like synthetic stocks, and regulated stablecoins would also fall into this group because of their stabilization mechanism. Group one is good. They like group one. And in their guidelines, according to their framework, you can treat them pretty much the same as other regular traditional capital assets. On the other hand is group two. This is the fun group, the stuff that makes bankers nervous. In this group are all the crypto assets that are considered unbacked. They don't have a counterparty. There's no one to sue if it all goes bad. Basically, if you're a cryptocurrency and you don't fit the criteria of group one, you're in group two. So this is the majors. Major cryptocurrencies are not tokenized assets and don't have price stabilization, like Bitcoin and Ethereum and most of the rest. Now, because of their volatility, the committee is recommending banks only commit not more than 1% of their total equity in long or short positions with Group 2 cryptos. And there's more. They're suggesting banks adopt a 1,250% risk premium. That's how much extra collateral is going to be needed to offset the risk of Group 2 assets in their estimation. That means if a bank wants to add $10 million in Bitcoin to their books, they have to stack $125 million in risk-weighted assets to balance that out. Usually for things like stocks, it's 20, or even for really bad, it's 150%. It's almost like they don't want banks to hold on to Bitcoin. And under their framework, Basel III, a bank's risk-weighted assets cannot exceed 10.5% of their Tier 1 capital. Now, I say suggestion, but really it's not a suggestion. They don't make suggestions. Their newest framework, Basel III, is an international regulatory accord. That means pretty much all the financial institutions in the developed world are gonna abide by their standards because it's treated like law. And those rules have gotten tougher. Ever since the 2008 financial crisis, lenders have had to carry capital reserves, and these reserves are supposed to be there as a backup in case loans start following through. And it keeps one bank from having too much exposure to any one entity. Because we have seen with Three Arrows Capital and Celsius how badly things can go if one organization is too deeply indebted to another one. Three Arrows Capital, Celsius, need I say more? All right, it's going to hurt. But let's look at the markets. At the time of writing, the global crypto market cap is $858.27 billion. It's down 4.16% in 24. The top 5 cryptos by market cap are Bitcoin down 5.04%, Ethereum down 6.14%, Tether, USDC, and Binance Coin down 2.25%. Ruja Ignatova is the woman known as the Cryptoqueen. She is also a new member of the FBI's list of 10 most wanted fugitives. Now the crime? Swindling millions of investors. She convinced millions of people to send her at least $4 billion. See, she founded a cryptocurrency company called OneCoin. Now on Thursday, authorities said Ignatova was the mastermind behind OneCoin. And OneCoin ended up being one of the largest pyramid schemes in history. Now don't worry, Bernie. Your record is still intact, but Ruja Ignatova is still pretty high up on the list, with charges of wire fraud, conspiracy to commit wire fraud, securities fraud, conspiracy to commit securities fraud, and conspiracy to commit money laundering. She's got a pretty secure seat among the world's worst scumbags to ever scam a buck from an investor. So what do we know about her? Well, she's a doctor. According to the FBI, she was born in Bulgaria in May of 1980. Brown to black hair, brown eyes. Oh, and she's educated. She reportedly studied at Oxford. Oh, and she's got a $100,000 bounty on her head. Yeah, if you were to tell the FBI where she is and they catch her, well, for finding their missing crypto queen, they're going to hand over a tidy sum of $100,000. Because according to Michael Driscoll, she's a criminal. Driscoll runs the FBI's New York office. And according to him, OneCoin was all a fantasy. Ignatova claimed the OneCoin was backed by a blockchain, when in fact it was backed by nothing but lies. Damian Williams is a U.S. attorney for the Southern District of New York. Today, in a press conference, he said, quote, Ignatova had a sterling resume. She reportedly studied law at Oxford and worked at McKinsey, but now she sits side by side on the top 10 list of cartel leaders, kidnappers, and murderers. During the period of time from late 2014 to third quarter of 2016, OneCoin took in $5.2 billion in revenue, billion with a B. All that money in, but it was useless to the investors. It had no real money. It couldn't be used to purchase anything. So she sold these packages, right? She'd sell educational trading packages to investors. And these packages could cost up to 6 figures. And they included tokens that could be used to mine OneCoins. And then OneCoin could only be exchanged for other currencies on the OneCoin exchange. According to prosecutors, it was more of a multi-level marketing scheme than a cryptocurrency. And it took in more than 3 million members. And that's just the ones they paid. They got paid for bringing in other people to try the OneCoin packages. I watched one of her promotional videos from 2016. And she had a production going on. It was very slick and it was very well put together. Her brother hosted the event, which we're going to be talking about him in a minute. And she promised that OneCoin was going to change everything for the world's unbanked. Instead, Williams said that she was just, quote, capitalizing on the frenzied speculation in the early days of cryptocurrency. And it all came down in 2016. Now, she was worried that the U.S. government was watching her. So one day she got on a flight to Greece and disappeared, which is its own micro story. Because she thought her boyfriend was going to screw her over with the government, so she rented an apartment below her boyfriend to eavesdrop on him. She drilled holes in the floor, and then she found out he, in fact, was working with the FBI, so she split. According to Michael Driscoll, she's got Russian ties. We know she was born in Bulgaria, and she's got ties to Greece, so she could be hiding in any of those places. Putin's not likely to extradite a friendly billionaire, not to the United States anyway. So she could be in any of those places, or Eastern Europe somewhere, or maybe the UAE. We know where her brother is. Her brother got caught. Yeah, he got arrested in LA back in March of 2019. So he got caught, pleaded guilty to fraud and money laundering, and as part of that agreement, he turned evidence. Well, not against just his sister, but someone else, a lawyer. Now, at present, Constantine, that's the brother's name, he still hasn't been sentenced. In fact, he's still loose on a bond while waiting sentencing, which is complicated because he gave testimony against an attorney, like I said, Mark Scott. And that attorney is swearing that Constantine is lying, of course. So Scott's awaiting sentencing. Constantine is waiting a sentencing. Another co-founder, Sebastian Greenwood, he's sitting in jail waiting for trial. Well, the FBI and Europol are hoping you're going to help them out. $100,000 as a bounty from the U.S. and 5,000 euros from Europol. German investigators are warning she might have changed her appearance through plastic surgery, so keep that in mind if you're thinking about collecting that bounty. The global NFT market cap is up over $12.11 billion. Sales volume is even on the day. According to CoinMarketCap, the top 5 NFT collections by sales volume are Bored Apes, followed by Otherdeed, Doodles, Mutant Apes, and Clone X. Now, keep in mind, some of these collections have very volatile prices, so do your own research. The U.S. Securities and Exchange Commission, the SEC, they denied Grayscale's application to convert their Bitcoin trust to a full-on exchange-traded fund, an ETF. Grayscale CEO Michael Sonnenshein responded with a tweet, quote, "We filed a lawsuit against the SEC." And barely an hour later, Grayscale had filed that lawsuit. I suspect they were already set up because I think everyone knew that they were going to end up getting denied, which is why they hired a high-powered DC insider lawyer, former U.S. Solicitor General Donald Verrilli. Now, Verrilli had worked for the Obama administration as U.S. Solicitor General from 2011 to 2016. And at the time that he got hired, Sonnenshein said all options were on the table if the SEC rejected their Bitcoin Trust to Bitcoin ETF application. Craig Salm is the firm's chief legal officer, and he said, quote, "In the name of being prepared for all possible outcomes, if one option is potentially bringing a lawsuit against the SEC, well, what better person to have as a legal strategist than someone who has represented the U.S. government?" Now, Salm says that Verrilli has really strong background experience, especially in cases involving the Administrative Procedure Act. Now, Grayscale's argument for the application has been that a spot ETF would bring the price closer to the net asset value. Now, at present, this Grayscale version is running at a 30% discount compared to actual Bitcoin. But they can't do anything with it. With a trust, they can't just create and destroy shares to keep up with demand. With an ETF, you could do that. Now, Grayscale said that this conversion could unlock up to $8 billion in value. The SEC, of course, they have a different point of view. They said that Grayscale had not done enough to protect investors and the public from, quote, fraudulent and manipulative acts and practices. In their rejection, they cited market manipulation as one of their concerns. They're not really happy with the role of Tether in the broader Bitcoin, and they want to see a surveillance sharing agreement between a regulated market of significant size and a regulated exchange. The theory behind that is that such an arrangement is needed to, quote, detect and deter fraudulent and manipulative activity. And this rejection really is nothing new, given that the SEC has been using these same concerns for years in rejecting other spot ETF applications. In a statement on Wednesday, Sonnenshein said, quote, "Grayscale supports and believes in the SEC's mandate to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. We are deeply disappointed by and vehemently disagree with the SEC's decision to continue to deny Bitcoin ETFs from coming to the U.S. market." I think it's starting to feel personal because the SEC was happy to approve an ETF whose entire purpose is to work against Bitcoin. It encourages shorting Bitcoin. That's right, the ProShares ETF provides a vehicle to bet against the price of Bitcoin. As the price of Bitcoin tanks, the second largest ETF in the country is thriving. The new ETF launched and it had 939 Bitcoin within a week. Valkyrie's only holds 840 and Van Eck 830. So a fund that works against Bitcoin is okay. Seems pretty clear to me that the SEC has an agenda. I guess that's what you get when the bankers are in charge, because Grayscale has been organizing a write-in campaign, and it worked to a degree. They said the SEC got over 11,000 letters and emails related to spot Bitcoin ETF. 99% of them were in favor. The SEC's move is bad for a lot of folks. This means pension funds, they're going to be stuck buying equities. And everybody knows equities don't have the same potential that Bitcoin does, while a spot Bitcoin ETF is a far better product for investing. Makes you wonder whose side the SEC is on. Who are they protecting? And we have come to the end of our evening, folks. I want to thank you, my listeners, because when you stop listening, I'll stop talking. Stay safe out there. Watch out for yourselves, but watch out for each other too. We'll see you tomorrow night.